Did you know that buying commercial property inside your SMSF could trigger a surprise GST bill of over $100,000? Most trustees miss this hidden tax trap until it's too late. In this video, we break down exactly when GST applies, how to avoid the pitfalls, and what you need to do before settlement. Let's dive in.
So buying a commercial property with your super fund, it really can feel like the ultimate wealth building move, can it? But what if I told you there's a single, often overlooked detail that could cost you 10% of the purchase price right from the get-go? Well, today we are pulling back the curtain on that exact hidden financial trap. I mean, we're talking about an unexpected tax that can slap an extra $100,000 onto $1 million deal. So the big question is, are you ready for it? Because let me tell you, just ignoring it is not an option. Okay, so before we get to the trap itself, let's just quickly touch on why so many people are flocking to this strategy in the first place. Because honestly, the allure of putting a commercial property inside your super fund is incredibly powerful, and for some very, very smart reasons. You know, it really just boils down to stability and control. You often get much longer lease terms than residential, which means more predictable, stable income for your retirement fund. And for you business owners out there, there's that incredible advantage of paying rent to yourself. You're basically funneling money from your business directly into your own super. It's a fantastic wealth-building loop. Right, but this is the exact point where that brilliant strategy can completely, and I mean completely, go off the rails. There's this hidden cost that can turn a fantastic deal into a financial nightmare, seemingly overnight. It is all about the 10% GST trap. So let's just paint a quick picture here. You've done all your homework, you've got your finance lined up, and you found the absolute perfect commercial property for your fund. The price is agreed at a neat $1 million. Everything seems like it's falling perfectly into place. And then, bam, this happens. An extra $100,000 gets slapped right on top of the purchase price. Now, this isn't some last-minute negotiation tactic. It's a tax. All of a sudden, your super fund is on the hook for an unexpected 10% GST bill, and your whole budget, your loan structure, it's all just thrown into chaos. And please, don't think for a second this is some rare one-in-a-million mistake. For buyers who aren't prepared, this is pretty much the default outcome. That extra 10% cost catches way too many investors completely off guard, turning what should have been a great investment into a really, really costly lesson. So why on earth does this happen? Well, it all comes down to one little number, $75,000. If your fund is projected to earn more than that in commercial rent each year, the tax office says your SMSF must register for GST. And believe me, the moment that happens, the rules of the game change completely. But here is the good news. There is a way to avoid this trap entirely. It's a savvy expert strategy known as the going concern exemption, and it is your key, your escape plan, to sidestepping that massive 10% hit. Now this slide right here is the key to everything. This is the escape plan laid out. There are really just 3 simple checks. First, both you, the buyer, and the seller have to be registered for GST. Second, the property has to be an active, ongoing business, which basically just means it has a tenant in place. And finally, and this part is absolutely critical, the contract itself must say in black and white that it's a sale of a going concern. You tick those boxes, and that 10% GST, it just vanishes. And here is the difference, plain as day. On the left, you've got the costly default scenario. On the right, you've got the smart strategy. We're talking about the exact same property, but with a $100,000 difference in the upfront cost. I mean, that's a huge amount of capital that you either have to scramble to find or you get to keep right there in your fund, working for your retirement. But wait, it actually gets better. You see, being registered for GST isn't just some annoying hoop you have to jump through to save money on the purchase. It actually unlocks a really powerful, long-term financial benefit for your fund. You can think of it as the silver lining to this whole process. See, once your super fund is registered for GST, you can start claiming back the GST you pay on all sorts of expenses related to the property. We're talking about things like property management fees, insurance, repairs, professional services, pretty much all those ongoing costs of owning the asset. You make these claims on your business activity statement, your BAS, and they effectively lower the running costs of your investment. So what does that actually look like in real dollars? Well, let's say you have just $20,000 in annual expenses. Your fund could claim back over $1,800 every single year. I mean, over the life of a 20 or 30-year investment, that adds up to a serious amount of money going straight back to your bottom line. So, what's the single most important lesson to take away from all of this? Well, it's that proactive planning isn't just a nice idea. When it comes to this stuff, it is absolutely essential for your success. And look, here's the bottom line. The time to start thinking about GST is before you even dream of making an offer. That one single conversation with your advisor right at the beginning is what separates a smooth, profitable investment from a really costly and stressful mistake. So really, it all comes down to this simple choice. You've got the bumpy, expensive road of inaction versus the clear, smooth road of smart planning. Getting the structure right from day one makes a massive, immediate difference to your fund's wealth. At the end of the day, building a successful retirement is all about getting the details right. This GST trap on commercial property, it's a big one, for sure. But it kind of makes you wonder, doesn't it? What other crucial details might be hiding there in plain sight? Definitely something to think about.